Welcome back, everyone, to the Biz Beat by SVA, where we focus on what business owners need to know about taxes, policy, and planning. I'm Lee Schwartz, Director of Business Development and Sales here at SVA Certified Public Accountants, joined as always by Eric Trost, Tax Principal, and of course, our firm's President. Eric, how you doing this week?
Pretty good. How's it going, Lee?
It's going great for me. I guess my big question for you is the Indiana Hoosiers, the greatest college football team of all time or the most perfect college football team of all time? Please choose.
I would call them the most surprising college football team of all time.
I think that's probably true. I am a proud Hoosier grad, having been at the game. And I got to tell you, it's going to be a while before you can put me in a bad mood. And I'm sure people will try. But man, it's going to take some time.
I think your basketball team will do the job.
That's true. Sad but true. But now that we have a championship, nothing else matters. But that's probably not why our listeners are tuning in. They're more interested in what's going on in the world of tax policy. So let's go there. Eric, when we talked a couple of weeks ago, there was a lot of talk around what was going on in the headlines, which was a lot of the tariffs. Since then, there's been a lot of talk about Greenland. There hasn't been an update from the Supreme Court, and I'm hoping you can just bring our listeners and our viewers up to speed on kind of what the last couple weeks has brought and what you think that means.
Yeah, so a couple things. It's been entertaining somewhat. If you're watching Trump's speech in, they call it Davos or Davos?
I think it's Davos, yeah.
Davos, yeah. So you're watching Trump's speeches in Davos, and I've watched a couple of them. I can say this. I don't think professional speechwriters write his material, or if they do, I think he ad-libs. That's what I'd say about that. Anyway, so with tariffs, what was going to happen is, and what still is going to happen, hasn't happened yet, is that the Supreme Court has in front of it a case to determine if the way that Trump administers the tariffs, that is, single-handedly declares you get a tariff and you don't get a tariff and I'm moving your tariff. Again, Trump's doing that under powers he believes he has within certain acts. And most of the time, how tariffs are set are done through congressional support, congressional vote. And so Trump's going outside of that. That's what this case is about. Hey, Trump, you just can't start using tariffs however you want. Everything that you do with a tariff has to run through Congress. And Trump is saying, no, I have the power that I can do this if I want. And the Supreme Court was scheduled to do a bunch of rulings a couple weeks ago, which they released, but they didn't rule on this one. So they are keeping us in suspense for now. They haven't announced when their next ruling date is, which is just basically them releasing a bunch of their rulings on different cases, totally unrelated cases. So this is still a case that's out there in the hopper for them to make a ruling on. We don't yet know when this ruling is going to come, though. So we've made no advancement yet to understand at least how the Supreme Court is going to rule with respect to Trump's tariffs. Now, that kind of relates to Greenland because as our listeners probably have seen in the news, there's been some scuttlebutt about Trump desiring Greenland, and the United States might, take it over by force or, try to purchase it. So I think there certainly is an expressed desire by this administration to have some kind of controlling interest in Greenland. And Trump has said, hey, if you're not on board with me, NATO allies, then I'm going to put another tariff on you. Specifically, he was talking to France about a tariff against their wines and champagnes of a couple 100%. So again, pulling out the tariff card and saying, do what I'd like you to do, or I'm going to hit you with the tariff. So this is Trump using, which he continues to use, the power of the American economy to negotiate with in a world forum. And right now, what's happening with Greenland is it seems like they're making some progress as to what the United States is going to be able to do in Greenland, whether it's a purchase or whether it's simply having rights for military bases and access to minerals. I don't know how that whole deal is right now. It's what they want to work out. There's probably more specifics out there, but from what I've read so far, it's basically, what they're looking for is military reasons, strategic reasons to have it there, to have bases there and or control and access of that area, and also the mineral rights that are as of yet somewhat untapped in Greenland. So the ability to go in and extract those minerals. It would be not surprising that Trump does get his way on this, because I think he is cajoling again allies into accepting some kind of position where the United States has these accesses, whether it's an outright purchase or not, but has these accesses to this the territories in Greenland they want to have access to, or again under the threat of tariffs. And countries just don't want to deal with what Trump does with tariffs because he can be very punitive very quick with them. And as of yet, the Supreme Court hasn't ruled that he can't do that, so he continues to do it.
Right. So, Eric, the markets were they were down quite a bit, and they came back up quite a bit when they announced at least that there was a framework of a deal. But from a tariffs perspective, we don't really have a whole lot of clarity on what that might mean. Is that right?
Yeah, not yet. I mean, right now, Trump's backed off on the tariffs, thinking that there's this deal in place or that they'll work something out. But as these things go, and if they come up with a disagreement, I think Trump would pop right back up and say, hey, I'm going to hit tariffs again. But as of right now, those threatened tariffs have been pulled back on. So what he was talking about, and specifically tariffs with respect to Europe, this is not really a China thing or a Mexico thing. This is Europe. Specifically with respect to Europe and NATO allies, those were the countries that were going to get hit with tariffs if they did not support, this Greenland access that the United States administration currently wants.
Yeah, what I find really interesting about all this, I mean, there's a lot of interesting things about this, but we started our podcast, I think was it May, maybe? And a big topic for the last 8 months, whatever it's been, has been tariffs. And it almost feels like we don't have any more clarity today than we did when we started talking about this back in May.
Right. And part of that is, I think there's been always some unknown as far as how Trump was going to use tariffs, whether it was policy and, hey, I'm going to put Trumps in place long term for structural changes with respect to our trade deficits, or protecting United States jobs and encouraging things that was maybe have been done overseas to be done in the United States. That's part of it. But I think there's also another part of it, and it is simply a negotiating tool that Trump uses, which means that it comes up and he uses it whenever he feels necessary to get some unrelated, maybe not even some kind of economic end, but some kind of other end that he wants to get. He'll pull the Trump or the tariff card out. So I guess that's how Trump's using them, which means that, the certainty with respect to what tariffs are going to do and where they're going to live is difficult to say as long as Trump keeps using them as a tool, as opposed to like a more long-term structural way you run your nation.
Yeah, interesting. So, every time we think there's going to be more clarity, and then every time it feels like we're not quite there yet. But we will keep you all up to speed. Let's shift gears, Eric, to something a little bit more practical, from something super high level and global in nature to something very much individual or business and specific in nature. And that is, I guess the question, what I'd like you to talk about a little bit is from your seat as somebody who's focused on tax for his whole career, what would you say is one of the biggest things business owners can do to help their tax preparer be more efficient during this time? So just kind of putting you're a tax partner, how can businesses and individuals be more efficient about getting information and making sure that that information is correct to their tax preparer?
Yeah. And one of the ways you might think about this is, what goes into preparing a tax return and why does it cost what it costs? Some of that is a function of the time it takes to put the tax return together. And that is a function of what kind of records are presented in order to put that tax return together. Now, what your tax return preparer should be doing is giving you advice on how to structure and put together your books so that you can have efficient tax preparation process. Ultimately, what a business wants to pay their tax preparer for is not just to put together the tax return, and take a set of books and put them together, or take something messy and clean it up. They want to pay them for advice that'll save them and give them things that are things to think about within the tax code. There's 1,000 pages of tax code, right? That's why people come to tax preparers. They don't know how to get through all that. That's what they want to pay their tax preparer for, is help me sort through those 1,000 pages, make sure I'm paying the least amount of tax that I'm legally responsible for. Don't bring into your tax accountant paperwork then that is, a shoebox full of receipts, and say, okay, I want to pay you to do my tax return. Well, it's really two parts at that point. It's compiling all that information together and then preparing the tax return. The more, as a business owner, you can present a set of data that is organized, put in an Excel using an accounting program, the more you can present that to your tax accountant, the more that you can be sure tax accountant doesn't have to spend time doing that, and they can spend more time telling you about the tax code and the ways through that tax code to pay the least amount of tax. And so that's what you want to recognize as a business owner, is what you can control is how you present your records to your tax accountant. And by the way, that's not just on you. You really should be asking your tax accountant, hey, can you give me some advice on, if I'm not giving you what you want in a format you want to see it, is there something I can do as the business owner to be able to do that so that I can efficiently get my taxes done? That should be a conversation you have as a business owner with your tax accountant, to make sure that when you do pay your tax accountant, again, you're paying for advice, you're paying for things that you otherwise, wouldn't get an understanding of, not to put together just your QuickBooks or your accounting records if they're not in good shape. So that would be step one, I think, as, hey, how do I put my stuff together so that I can have an efficient tax return preparation process?
Right. So, asking your tax preparer, what can I do to make your job easier? What can I mean, that it's obviously very self-serving for us as well, but keep in mind, the more efficient your tax preparer is, the less time they're spending, and the less time they're spending, in theory, the less your bill is. So
I do want to say it's not self-serving necessarily for us. If you say, hey, here's a pile of stuff in a shoebox and put it together, we can do that. You'll be charged for it though, right? So
right.
If you say, I want the most efficient process, then you want to do some of this yourself and get advice on how to put things together. But you might be the person that says, I don't want to do any of that. Okay. I don't mind doing that either. It's just, as long as, we get paid for that, that's okay. We'll do whatever you need whatever you need to be done, we'll do it. So for our standpoint, from a business standpoint, it really is not self-serving either way to get it put together. I think it's self-serving for the business owner to be able to do this.
Yeah, agreed. And efficiency is good for everybody. So we're doing a lot of this right now. I always put this out there at the end. We try not to give specific tax advice, but I will say now's a time when a lot of people are going through that process of, right, my tax preparer hasn't been doing a good job for me. It's time to make a switch. That is why we're here. That is what we do. So if you do have a need, please reach out to us. We can talk about how we can help, because now is the time. But Eric, let's move on to the inbox.
That's a great plug, by the way, Lee. Thank you very much.
Yeah, well, that's why I'm here, right? I mean, come on.
Right.
So let's move on to the inbox. As a reminder, you can send your questions to bizbeat@sva.com or submit them on our website at sva.com/bizbeat. So the question this week, Eric, is, I've heard about setting up trusts for my kids. What can that do for me?
Yeah. And so I saw this question come in. Sometimes what I hear is that, people think trusts are somehow an income tax savings, and can I put things in a trust and somehow save on income tax? And generally the answer is no. Trusts are not income tax savings vehicles. The reason people use them is they are asset protection, so creditor protection vehicles. They're a way to control what you're giving your kids over time and have a set of rules around it, rather than just giving your kids financial resources and maybe you're not sure how they're going to use them. So oftentimes what trusts are set up for, think of it as a set of rules that will help administer long-term how you want your wealth to be transferred to your children. And so, you could do it as, hey, I'm just going to give them, I trust my kids. I've got X dollars. I'm just going to give it to them and they can do what they want. Okay. If you're in that position, you maybe don't need a trust, at least for that reason. If you're in a position where my kids are young and if something happens to me, I don't want them to have access to all this wealth right away without some kind of guidelines or framework, or I'm going to start making gifts to my kids now, and I want to have a lot of guidelines and framework about how they have access to those gifts. That's what trusts are used for. There's other situations, again, where trust can be credit protection. They can be marital protection if you give something through a trust to one of your kids and they get married, and then what if there's a divorce? Obviously, no one goes into a marriage waiting for the divorce, but the stats would say it's common. And so a trust can be helpful in protecting assets in that kind of situation. Trust can be helpful to help clear your estate without going through probate. So there's all sorts of reasons to have trust. But I would think of it this way: is it allows for a guideline and a framework of rules for assets that you want to succeed to next generations, and still have at least some control over it even after you're gone, and have some control and rules in place. But it's not an income tax savings. It's really more for, a distribution and guideline savings.
Right. And there are implications around estate taxes for that reason as well, right, Eric?
Yeah, that's a whole nother topic I think we could get into, is what to do for estate taxes. The great thing about estate taxes now, ever since OBA, is that the floor for estate taxes is actually really high. It's over $30 million for a married couple. So the only people paying estate taxes and then they have to do estate planning with trusts are those that have those really high estates. If you don't have that kind of wealth buildup, you don't have to worry about estate taxes. Still plenty of reasons to use trusts, like I said before, but it's not necessarily has to be an estate planning tool. Once you get to a taxable state, let's say you're married and you have over $30 million of wealth, that's where you should be talking to an estate planning attorney to make sure that you're doing what you should to transfer your wealth instead of paying the government. But I think we can get into a whole nother topic on that.
Yeah, we can talk about that another time. And end of the year is always a good time to look at your personal finances, and looking at mine, we're at like 29.8. So we still don't need to worry about, me and my wife don't need to worry about setting that up yet, right? Until we get over that 30 million mark.
I'm going to have to actually check with payroll on what actually we're paying you, Lee.
You're not paying me. It's all embezzlement. So don't worry. Yeah, don't worry about it.
I feel good about that. You're worth it.
Totally worth it. Well, that wraps up this week's episode of the Biz Beat by SVA. If you found today helpful, make sure to subscribe on Apple Podcasts, on YouTube, or on Spotify, and share it with another business owner who you think might find it helpful. As always, as I mentioned earlier, this is meant to be general information, not customized to you. If you do have questions about how this is going to affect you and you're an SVA client, please reach out to your SVA contact or professional. If you're not and you'd like to become one, reach out to me and we can talk about how to make you a client. Thanks for listening, everybody. Have a great week, and we will see you next week on the Biz Beat by SVA.
It's the Biz Beat by SVA, breaking down the news of the day, from tax tips to business trends, smart insights from trusted friends. The Biz Beat